We're live. It's Bruce Singer here. Another version of the 9 a.m. spot. Again, I'm Bruce Singer. What we do is we broadcast this 15-minute webinar to bring some unique value and some unique insights during the COVID-19 pandemic. And today we have our guest, who's Matthew. Matthew, can you tell us about yourself and what you do?
Yeah, thanks for having me on today, Bruce.
Yeah.
My name's Matthew Nichol. I'm a partner with Citadel Mortgages. We are a full-service mortgage brokerage, insurance division, and so on and so forth. We're basically a financial institution to help Canadian consumers become mortgage-free sooner, and we're changing the way mortgages are done for Canadian consumers.
So today, Matthew's topic is going to share some really important facts because today, it's, as you know, there's financial challenges. So let's get into it. And at the end, there will be a 5-minute Q&A, so we encourage you to send in your questions as well. So Matthew, you talked about, when we spoke before, you talked about the three facts that you want to share today. What are those 3 facts that you really want to share with the people on the attendees on this webinar?
Yeah, great question. Look, the 3 facts that I feel that are top of mind to myself and to industry insiders that people may not think about in the consumer side of the equation are loan to value. Right. So the value of your home to the mortgage that you have on there, the income issues that we've seen lately because of COVID, everybody's changed, right? Their revenue streams have changed, your income has changed, that sort of thing. We have the benefits coming out from the government and whatnot. Plus, we also have time constraints on files. So time, taking longer. And I'm assuming you want me to elaborate on those.
Yeah, please elaborate. Yeah.
Loan to value, when you're looking at the loan to value of your home. So say you have a mortgage right now and you've got a $1 million home and you have a $700,000 mortgage, you're at 70% loan to value, right? That's how we calculate that sort of thing. Now, at the end of the day, we have lenders in the market who will go to 80% of the value when you're refinancing your home. Generally, that's the limit, right? When you're talking A lenders, bank lenders, and B lenders, trust companies, that's where you're stopping at. Now, what we've seen since COVID has happened, since not COVID, but the lockdown. So when all the restrictions came in, people weren't allowed to go into work, so on and so forth. What we saw was lenders that had historically for years and years and years gone to 80%, no problem all day long in certain geographical areas, they've actually pulled back. We were, at a point where we were actually submitting deals and getting responses back saying, hey, sorry, because of lockdowns, now we're going to scale back to 70-75% and be a case-by-case basis. Right. That was it's something that we saw coming along, but we didn't expect it to be so abrupt. Right. So that's something to be mindful of, because when you're looking at renewing your mortgage, great. You're just renewing, you're keeping the same term. You want to add extra funds. You want to add access to funds, maybe a line of credit, the home equity line to help you with this times and get through it, whether you're a small business or for personal reasons. Right. That can affect the amount that you can actually draw from your home. Right. Equity wise.
Yeah. It sounds like that could be detrimental to some people too. It could be seriously detrimental.
Exactly, because say you're sitting at 70%, and now you go and speak to somebody like myself, right, or somebody from our team or another mortgage professional, and you get advice from them, and next thing you know, you're putting through a deal, and they're saying, yeah, we can look at this, that, and the other, and they come back to you and say, hey, look, this lender is not going to approve you for over 70% because of COVID, right, because of what we're seeing, and then they're stuck going, well, hell, what am I going to do, right? But 3 months ago, just 3 months ago, Bruce, if you had thrown that deal through and put it through the system, you'd get your 80%, right? Wow, and you'd have it already. So that's the thing, right? And it comes back to that old adage that we all know, right? You put things off, you think, oh, okay, I'll do it tomorrow, it's fine, I'll do it 3 months down the road, and then something happens, right? A life event, like what we're going through now. And then that leads me into the income issues. Right. So people are having issues with income, obviously. Right. The benefit, $2,000 a month isn't a lot when you're used to making, 40, 50, 60 grand a year, an average salary in Canada, right, for an employee. So that causes constraints as well. We've even seen where we put through an executive. Right. And when you're looking at an executive, hey, executive, a CFO, CEO, you've been there for 15 years, you get a great income, you're bonused every year. Awesome. We can use 2-year average of that bonus income, right? In a normal situation. We've literally had A lenders, so banks come back to us and say, sorry, because of COVID and because of the risks that we see in the market, we cannot utilize that income for you. So now your purchasing ability or refinancing ability has dwindled, but to no fault of your own, right? It's just the perception of risk in the marketplace and what they feel is going to happen to the market in COVID. Will this person have a bonus? So on and so forth. There's so many variables that that they're taking into account. It's really a day-by-day basis, right? And a case-by-case basis when you're looking at these files. But you see those restrictions. You see well, I had a business last month making 20 grand a month. We actually had one just about 24 hours ago that was pulled back from the lawyers. Ready to sign. Can you believe that? Ready to sign. Everything's done, instructed. You've been, your lawyers called you, Bruce, and said, hey, come on in and you're going to sign tomorrow and everything's good. Lender goes, sorry, we're pulling out because we just requested your bank statements from April because you're self-employed. Your income went from 20 grand to 5 grand. Well, of course it does. I'm in the food industry. I have a retail business, this, that, and the other. And they go, 2 days from closing? No, we're not going to do this deal because now it's too risky for us, right?
That's pretty scary. That's really affects people's lives because like basically they're really, it messes things up completely.
Of course, right? You're planning on this. You're going through the process. Yeah, you're complete, right? And I'm not saying this to scare anyone, right? It's just for the matter of fact of, you really need to be educated on this sort of thing to understand what you need to do.
So let me ask you a question. So if you had to say you're in the business for a long time. I mean, right. COVID-19 came up. Obviously you know it's going to happen, right? But was there one thing that blew your mind that happened that caught you literally blindsided or by surprise that you didn't expect, that is something that you want to share today with the audience?
Yeah, one of the things that I didn't expect was the restrictions and how quick they came in, right? One of the key takeaways that I found was, all of a sudden we had the loan to value restrictions, we had the income restrictions, we have, long time people with great credit that we can't get approved for certain loan to values and such, right? You're seeing people back out of deals last minute, left, right, and center. This stuff we haven't seen in years, right? I wouldn't want to equate it to, I've been in this business since 2007. Right? As a mortgage professional, right? And I was around for when 2007, 2008, 2009 happened, and we saw the market dip and crash, right? We saw the housing market soften there and slump. And I don't want to equate it to that because it's not that bad, right? But that was the last time. So when I started my career 13 years ago, that was the last time I saw something where it was so abrupt, right? Where it was just, hey, one day everything's great, tomorrow everything's falling apart, and it's a day-by-day basis. Now, we have gone through the motions. We have got to the point where we've been able to mitigate risks for clients and consumers. We've been able to implement certain policies and procedures and make sure we always go for the advice first, right? And the education, right? So we like to educate people. So it's taking a little bit longer working on files. It's taking a little bit longer to work through deals with clients and consumers, right? To help them with that. And, I'm going to add a second key takeaway to that because that's obviously one part that
another key takeaway,
yeah, that blindsided me. But my key takeaway from all this for consumers, because we're on the topic, is, get your financial health checkup. Whether that's through a professional like myself, somebody that you've dealt with before, we all have this extra time right now, not being able to go out to the events and to the shows and that sort of, like I had Raptors tickets for several games and hey, they're out the window now, right?
Of course, yeah.
Where are you going to spend your time with, right? You can only watch so much YouTube and sit there on the phone and with the family, right? So what I would say is, take time, review where you're at with your finances, get your bank statements, get everything in line, look through everything, and then consult a professional like myself, like a mortgage broker with Citadel Mortgages or another broker or agent out there, somebody who knows what they're doing to give you a holistic view, because at the end of the day, if you have mortgage, if you only have rent, say you don't have a mortgage, so on and so forth, you've got your extra spending, you've got everything you're paying out on. You don't really understand that, right? But if you follow along your financial journey, you'll really be happier in the end, and you'll come out of this better because you'll understand, right? And you'll be better poised. I think there's going to be a lot of changes to how people act and how they react to the market and spending habits, right?
Thank you, Matthew. So let's go. There are some questions that are coming in. Okay. So here's one of the questions. So what's available for consumers to utilize? Because there's no in-person interaction.
Yeah, there's little. There is. You're right. Look, Bruce, there's little to know, right? Like,
Yep.
think about this, right? We're doing these interviews online, which are great, right? But you and I haven't been able to sit down and have a coffee in person in what, 3 months, right? You know, we're going
Basically, yeah.
through these times, right? So you have to do that social distancing, and you have to be mindful of that and be safe. Now, for the consumer in our industry, there is a lot of technology to help with it. The problem is, like, we opened up 2 years ago. We've had technology from day one. I can do your mortgage end to end. I can never meet you, and everything's verified. Everything's done through online secure portals and ID checks and e-signing and so on and so forth, right? So you've got those document collections. You can submit your documents online. You can sign online, right? You can do in-home signing with lawyers now, right? We've had that for a while, that service with our company, right? You do online applications. We can do Zoom calls with consumers, which I'm doing now, right? And calls and emails and such. So you can get everything you need advice-wise. Plus, you can complete a traction end-to-end with little to zero contact with somebody else, right? Unless you're somebody who wants to go in and sign at the lawyer's office, you can have somebody come to your door and sign with you. Now, that's still somebody that you're going to interact with by grabbing a tablet and signing and e-signing, that sort of thing, right? That's the one part of the transaction that's there still. But at the end of the day, you can get through it in a very safe manner and still work through that process. So you don't want to be shied away from, hey, I'm not going to refi my mortgage. I'm not going to look at renewing my mortgage because it's 3 months out. I'm not going to talk to anybody now and look at options. I'm just going to sign whatever my lender gives me because I don't want to go and meet with somebody and go through that hassle of, being face-to-face, person-to-person. There's so many options out there. And I'd say to
Huh.
consumers that are interested, reach out to somebody like myself or another professional at Citadel. We can help you with that.
Thank you, man. So one more question here. So what is your person? Someone sent in this question. What is your personal opinion on how long COVID-19, the events of COVID, will take to soften the new normal? You know,
Wow.
in your industry, like what's the outlook? What's the outlook?
Yeah, look, that's a great question. We've all been kicking around for a few months now. You know what I mean? And at the end of the day, look, on a personal level, just for us in general, before I get into my business, right? Just for us in general, what I've said from day one, honestly, and I've said this to my colleagues and friends, they said, look, I don't see us seeing a new normal until August, maybe July. I go, this is going to take months to kind of calm down. Um, and I honestly think that, it's obviously hurting small businesses, right? We're going to see a lot of small businesses fold. We've already seen it. It's going to hurt that side of the economy, right? I think we're going to feel the effects of that in the economy for at least another year or two. Like, it's going to be a long time before we can change those things, right, and get back to that normal. And for our business, look, I think it's not to say that it's good, right? COVID is not a good thing, but to have all of these associations, the educational associations in our business, the lenders come up to the plate, the appraisers come up to the plates, like appraisals on a property take a little bit longer now, right? Obviously, I can't go into your home and take pictures of it. But guess what? They've now allowed take pictures of the inside of your home. We'll do drive-by appraisals. Some of the appraisers will go up to the windows and take images, and they'll actually walk around the property and such. So you're still getting that value. It's taking a little bit longer, but what we've seen is really people have come together and different sides of the industry have maneuvered to actually mitigate everything to help the consumer at the end of the day. And that's really the main focus, right? Everything we do is for the consumer at the end of the day.
Of course. So one final question. Are there any down payment assistance programs that are out there that
So
can
there
help
there
consumers, like
so there
government?
are
I guess government. I don't know, government or bank. What?
Yeah, there's different sides to that coin, right? So there are different down payment assistance programs, right? There are the standard government first time home buyer assistance program, right? You've got 5%. They will match it up to an X amount based on your income and such, right? Multiple of your income and the value of the home, right? To find out if you're approved or approvable for anything like that, you can always reach out to somebody like ourselves who has that information in there to give you the nitty gritty and a more drawn out answer, right? But there are programs like that from the government. There is also regional programs, municipality down payment assistance programs. A lot of people don't know about these, right? Not every municipality has one, right? So you go and you look for Peel, you look for Durham, you look for, York Region, right? And see what they have in your area, because different towns and different municipalities actually have assistance programs you can tap into. And that's a little known fact, right? That's not something that's normally shared when we're talking with people about down payments and stuff. We do, but you don't hear this very often, right? So that's something that they can tap into by going to a qualified professional like ourselves. and mortgage professionals alike to be able to go through that process and find out what's there for them.
Okay. So is it a good time to refinance my mortgage to purchase a new investment, or should I wait till COVID-19? I guess the question here is timing wise,
Yeah, you know what?
I guess it's a balance because people need the money, or you know what I mean?
Right,
What's the timing?
exactly, right. And you know, most people do ask this question. They've always asked this question: is it right time to buy? Is it right time to refinance? So on and so forth. And the answer that I've given forever still holds true during COVID. If you want to buy a property to live in or as an investment property to rent out, buy when you're able to buy. If we can pull out equity from your home right now and get you that investment property and increase your cash flow and help your retirement down the road and increase your portfolio and your holdings and your standing as a self-employed person standing on your own with your own financial goal to move forward, let's do that now, right? Any time is great for that. The only time that I tell people to wait, hold on, and take a second, unless it's, hey, you can't afford this, because then it's like, hey, wait a minute, you can't afford this right now, we can't do this, right? But in a situation where you can afford to do so, the only time you want to hold back, Bruce, is when you're looking to speculate on the market and flip something. So if you want to buy something, renovate it, and flip it down the road, you need to know what the market's going to be like 3 to 6 months down the road when you complete that project. You need to know for certain you're going to be able to get your capital out at least with hopefully a profit, right? So if you're buying to flip, yeah, that's a longer conversation. That's something that you might not want to do in these times unless you find that right opportunity, right? And you don't want to get into the flipping business in this type of market, right? But if you're buying for your own, rental property, a cottage, a secondary home, you want to refinance or purchase your first home, go for it. Doesn't matter what the market is. You can hold on to that asset for 5-10 years if you need to before you can flip it out and get your money out of the property if there was a downturn, right?
Thank you, Matthew. Anyways, we're coming to the end of the 15-minute 9 a.m. spot. Matthew, I want to thank you very much for your insights. They're great. It sounds like look, these are tricky times. You know what I mean?
Look, they are. And, thanks so much for having me. I really appreciate your platform and having me on here today.
Yeah, you offer some great value.
I really appreciate that. And it is, look, it's difficult times, but, at the end of the day, it's nothing to be scared of, right? Consumers get, and even before I was in the industry, you'd hear about these things and the market and the rates fluctuating and everything. And you go, oh, geez, like, what am I going to do? I'm just going to hold off. I'm going to wait.
Yeah.
You're not expected to know these things. You're not expected to have that insight on it. Reach out to somebody like us. It's free. You can call me today and it's a free service. I'll spend all the time in the world to help you.
Thank you, Matthew. Matthew, have a wonderful day.
You too, eh?
We'll talk soon. All the best, everybody. We'll get you next time. Take care.
Bye-bye.
Next time. Bye-bye. Take care. Bye-bye.